We have a ceasefire extension, but still a closed Strait of Hormuz. How do I price that in to global markets?
With difficulty, Guy. Good morning. But what we are seeing, and I think increasingly so, is signs that the market is very minded to take an optimistic, a glass half full perspective on things here. So, yes, we had a little bit of a setback at the end of the US day with the idea that we're not seeing J.D. Vance flying to Pakistan just yet. Then Trump came out and said that the ceasefire will be extended indefinitely. And the market is taking that not as some sort of sign that the US is softening, but more as a sign that it's waiting patiently for Iran to sort itself out, and that actually in Iran there's some sort of disagreement, which Trump alluded to, between more moderate and more hardline elements. The market is holding on to the hope that the sort of more moderate approach will win out and that we'll be able to get to some sort of an agreement. And so you still see that with stocks hanging on in there and crude oil prices holding with Brent somewhere just around but below $100 a barrel as well.
Paul, there is this disconnect between the equity rally and what's happening on the inflation front. We got a reminder of that with the CPI out of the UK that came in slightly stickier, slightly higher than the forecasts. We were speaking to the CEO of AkzoNobel, talking about pushing up prices. That's going to go through and feed through to their consumers. When does that gap close? When do the equity markets wake up to the inflation challenge, or are they right to look through it at this stage?
I think that there's two things. One, you're absolutely right to point out the real-world impacts are growing from the crisis pretty much every day. At the moment, Tom, we're not just seeing it in inflation readings, but we're seeing it in larger and larger companies talking about impacts to their production, talking about, cancelling flights if it's airline companies as well, and talking about the need to raise prices. So it is feeding now into the real economy. The market is looking through that and looking more to the optimism on the sort of tech side in particular, than it is sort of still seeing it as, they whisper the word transitory. Well, we've heard that from central bankers, of course, before, and it proved to be a lot longer and stickier than they had hoped for. The market is still looking on the bright side of things. But at some point, if we don't get a resolution and we don't get oil starting to flow through the markets again, then there will be a wake-up moment for the market.
What did you make of the Warsh hearings, Paul?
Yeah, interesting one, wasn't it? I mean, the biggest takeaway was probably the soundbite from Elizabeth Warren talking about accusing him of being a sock puppet, and the fact that, he had to sort of write that out and deny it. I feel like Bloomberg Intelligence's analysis is quite an interesting one to think about here. They sort of see him more as a little bit on the hawkish side, talking about the needs to manage inflation in the economy, talking a little bit less about the mandate on the employment side, and so they're thinking about it through that sort of lens. What I would say more broadly, though, is that the Treasury market is getting increasingly unruffled, not only with the Warsh comments, but also with the war in the Middle East too. We're seeing implied volatility on that really falling down, and the yield range that we're seeing in the Treasuries market also slide. That's helping credit outperform and also boosting those equities.